Tina Mitchell here with your Money Chat, the movie, How the Grinch Stole Christmas. There's a climatic scene where Mr. Grinch, now having change of heart, finds the strength to prevent all of the presents from toppling over the cliff, thus saving Christmas. How's that for an analogy? Yes, Pal's heart grew 3 sizes before our eyes last Wednesday, uttering the resounding words, "The time for moderating the pace of rate increases may come as soon as next December meeting," as if the market was gearing up for expectations to all receive lumps of coal in our stocking. And suddenly there was a realization that Santa Pal did receive our letters. We got a pony instead. What Powell did last Wednesday was remove the uncertainty of whether we'd get 50 basis points or 75 basis points on the December 14th meeting. The news spiked the probability to an 80% of a 50 basis points hike, which the market priced in and saw an improvement in the mortgage interest rates on Thursday. In addition, the PCE inflation report came in on Thursday morning, short of expectations, which shows the peak inflation narrative still playing out. This report is another tool that the Fed is watching to gauge whether their restrictive policy measures are working. So this is a tally for the pivot column. Well, we win some and we definitely lose some when it comes to the markets, as implied by Friday's price auction, to the tune of "Let It Snow." Oh, the interest rates are pretty frightful, and it's easy to let our minds become spiral. Whatever Powell says, we don't know. Just think of rainbows, eat some tacos, and drink Pardo. Although the current climate does remain somewhat frightful, we recognize that each day presents a new set of outcomes that could quickly change our environment. When the going gets tough, the tough gets going. When all else fails, there are still tacos in Bordeaux. Non-farm payrolls came in stronger than expected, 263,000 versus 200,000. But the critical element was wage growth jumping from 0.6 versus 0.3 as expected, coupled with the reduction in the labor participation, people looking for jobs. These two data points tell a story of the lower labor force participation, in turn causing wages to be driven higher. This challenges the Feds to keep rates higher for longer, thus causing Treasury prices to sell off and pushing mortgage rates higher. Now, we must keep in mind that this is not a sprint, but a marathon, although often it feels like a race to the bottom. Just in the past couple trading days, how quickly sentiment shifted upon Powell's speech, giving away the strongly inspired market rally. The open to the week on Monday, the market opened on Monday, the bond market dropped over 75 basis points in just one day. This was almost a 0.25% increase in interest rates from last Friday. We have a lot more data points to pull from in the coming weeks before Powell takes the stage again. This coming Monday, we're going to get the ISM services, which is the report that measures the impact of service providers in our economy. This is another inflationary canary in the coal mine. So considering how the market is behaving towards these releases, it could be another market mover. Santa, don't forget the Grinch. I know he's mean, hairy, and smelly, and his hands are cold and clammy, but I think he's kind of sweet. Cindy Lou Who said. Tina Mitchell here, and that is your Money Chat. Coming up next on the Money Hour,